Should I get an FHA or a conventional loan? Do I need 20% down to buy a house? And what is the best loan for a first-time home buyer? I'm Katie Zaromsky in the Denver area, and I've got Bob Frio with Frio Good Mortgage here.
Welcome back to the channel. What we do in this video series is we address some of the main questions that pretty much anybody has. And then what we're gonna do is kind of dumb that down even further into a real-life case study. And you can obviously stick with us to the end to get that information, and you'll be able to tell us what you would have done in that specific situation as well, right, Katie?
I agree, because every situation is different. So jumping into the first question, what exactly is a down payment, Bob?
The down payment is you as the borrower's equity position in the property. So for simple numbers, if you're buying a $200,000 property and you want to put 5% down, you're literally only putting $10,000 down and 5% equity stake in the property, and you're getting a loan for the additional 95%.
Here's another question I get asked a lot. Do they need one?
Yes.
FHA versus conventional. What is the down payment difference?
The down payment difference is what we're talking about loan to value. So it's real simple calculation. The minimum down payment requirement on a conventional loan is 3% for first-time home buyers. Most frequently, people put down 5% or more. The actual national average from last year is 7%.
That is correct.
3.5% down is the minimum requirement for an FHA loan.
How do interest rates vary between the two?
An FHA loan is a government loan product, which means that ultimately the U.S. government will be the owner and they will securitize that loan, which means, generally speaking, an FHA loan, a USDA loan, or a VA loan, which are all government products, will have lower interest rates if you're just looking at the interest rate per part of the loan file versus a conventional loan. However, oftentimes an FHA loan is way more expensive to utilize as a borrowing source than a conventional loan, and you're gonna see why in this case study.
Before we jump into the case study, I want to remind everybody that there's no single right answer here. When it comes to buying a home, it's what home is best for you and what's in your budget. So you want to make sure that you take in a few different variables when you're looking at purchasing a home and making your down payment decisions.
You can get under contract and you can get approved for the loan. It really doesn't matter what loan you ultimately use to acquire the property, because you can always refinance the loan. This case study is actually my first home bought here in Denver. We own a 2-unit single family property. We bought this property for $435,000, and we have a credit score at the time of 780, and we had enough money for both options, a conventional or an FHA loan, and we're gonna dive into the true nitty-gritty numbers here, and you'll be able to tell me what you would have done with your money.
Okay guys, so right now we're gonna take a look at Bob's personal case study, and we've broken it all down here. We're gonna go step by step.
Yeah, it should be pretty easy to see. But first things first, we broke that down into some things that most people consider, right? Is your purchase price, like, holy crap, I just bought a house for X. Now I really have to get the money for it and or pay that back at some point in time. Down payment, that's always a function of how much is actually going to be flowing out of your bank account at closing just to get your loan to value work for the lender to approve your mortgage. Closing costs, yes.
Everybody has to pay him, guys. I had to pay him, Bob had to pay him, and he's even in the business.
That's right. However, we took a loan that paid our closing costs for us for a higher interest rate. So anybody can do that. So again, closing costs for each of these scenarios was actually wiped out. And then ultimately the amount you borrow is going to be a reflection of your total housing payment, which is your monthly budget, okay? Let's jump right in. Purchase price, real simple, $435,000. Now, an FHA loan on a 2-unit single family property only requires 3.5% because the government is backing that loan. They say, hey, cool, buy a 2, 3, 4-unit property, 1-unit property, your down payment is still the same. 3.5% of $435,000, $15,225. Real simple. Now, conventional, you do have to pay not pay, but you have to put a larger down payment, so you have a smaller loan to value to get a conventional loan on a multi-unit property. So your outflows, $65,250 versus $15,225. So if you're only analyzing the down payment required to acquire a property, what do you think wins?
That's true. Looking at just the top half of this, guys, what would you do? Leave a message in the comments.
So closing costs, one of the reasons that FHA allows you to buy a 2, 3, 4 unit property with less money down is because they're charging you a financing fee just to use the loan. So again, this is a percentage of your loan amount that FHA, they're going to get you somehow. That's just something to consider. Whereas a conventional loan does not have that financing fee to acquire the property. But again, the offset is the higher down payment. Now your loan amounts are obviously different, which your total housing payment, just to remind you, does have principal and interest, taxes, insurance, and any mortgage insurance premiums and association dues if they're required on the property. Principal and interest for the FHA loan was a little bit higher than the conventional loan. Our homeowners insurance and taxes are obviously the same for the parcel. Another big variance here is the mortgage insurance. Because you're putting less down on a conventional, on an FHA loan versus a conventional loan, your mortgage insurance premium is going to be much greater because in the eyes of the bank, in the eyes of the lender, your risk is higher. So they're going to get, again, their money somehow if you're not putting that full 20% down. Okay. So the difference between the total housing payment between the two was $588. Now, something that we wanted to consider was, what was the difference between loan amounts and our down payment? Actually, as a matter of fact, we did have to pay closing costs on the conventional loan. So sorry about that. So the break-even point for us was almost 8 years out between the cash down out of pocket for the conventional loan versus the FHA loan.
Okay, now that's definitely some good information to have. Now you're talking that you did this FHA when you first purchased the home. Where are you at now? Are you sticking with the FHA?
No, so we've had the house for about 6 years now. We've refinanced 4 specific times. I do each and every loan the same way. I always do a quote unquote free loan where I'll take a higher interest rate to get a better loan product so I don't have closing costs. I'm in the industry, I do this all the time. But yeah, so we currently have a conventional loan of which we will have that paid off within the next 12 months. So we'll have a 30-year mortgage product starting with an FHA loan, ending with a conventional loan, paid off in less than 7 years.
That's absolutely fantastic and some great information for all of our viewers out there.
So ultimately, when it comes down to figuring what loan you should get, is a number of factors, and these are the factors that, and yours might be different. So in that case, what would you have done?
Yeah, taking a look at everything on the board, would you have made the same decision?
At this point in time, snoop around the channel. Subscribe if you haven't already, because we upload videos each and every week, and we'll love to see ya.